The markets are flipping, oil is spiking. Cathie Wood and Tom Lee have some stark words for us on where they think the market is going. So that's what we're going to dive into today. Without any further ado, let's go ahead and jump into it. Start watching this video here.
Quarters. So the U.S. not only looks better, but on a relative growth.
Was this the first whiff of that?
Our take is we do expect that decline to happen when markets don't respond to good news. I think our bet would be markets are actually going to lift through the end of the month, that we're going to actually be positive for March and maybe hit 7,300. Later in the year is when we think a bear market might show itself.
What about oil, right? We're watching it so closely. We're driven by headlines, some of which are apparently erroneous. I don't know what do you do with that?
Yeah, I mean, it's a very confusing time. I think it's very difficult if someone's trying to trade both the headlines or trade oil. But if I look back at the last 2 days, oil's $15 higher than it was last week, but the S&P's higher. So to me, the market actually is handling higher oil prices better. And, we wrote in our note this morning that we think higher oil prices are actually good for the U.S. stock market.
Yeah, see, I think that's going to be a really hard sell for people who are watching this.
So is that going to be a hard sell? I mean, so far, like you said, the markets are handling it great, actually. We're down today a good amount, and we'll dive through the charts here in a second. But what is actually happening with this? Because Tom Lee's saying, we're going to have, at the end of March, possibly a positive month up near 7,300. And then we're seeing a lot of the analysts say that over the next few months, we're going to see that bear market. And then more in the summertime, interest rates will fall. Hopefully this war will blow over and we'll go back to a normal spot where markets can continue rising. So very, very interesting. Let's keep listening on what he has to say.
This program, trying almost too hard to paint some bullish scenario. How in the world are higher oil prices, which then mean even higher gas prices, which mean higher jet fuel prices, and all sorts of other issues that are related to that, input costs on a whole number of other industries? How is that possibly good for the stock market?
Yeah, part of it's a relative. One, U.S. is an exporter of oil, so we net benefit as an economy from higher oil. The second is other countries are importers, so the U.S. not only looks better, but on a relative growth basis, it should outperform, which means flows back into the U.S. And the third is, as we worry about global growth for all the reasons you described, when growth is scarce, people buy growth stocks. The U.S. stock market is a growth index, so it's coming out of the rest of the world back into the U.S. So I think it's a rotation story.
All right, speaking of growth stocks, tech has been up for debate, certain parts of it more than others. We're going to get Oracle earnings after the bell tonight. You told me earlier this morning on the stage there on the beach that you think software's bottomed.
Yeah.
Why?
Well, I think software has bottomed because we tend to price in the negative risks early, which I think's happened, and we've seen the multiples come in. The IGV, which is the software ETF index, has lost 5 multiple points. Now the forward PE is 16 times. So to me, you're trading this like a cyclical industry now. And I think out of that universe of 110 stocks, many actually have durable businesses. So I think you're getting paid to buy it here at 16 times.
What about the broad?
And right there, so he just said it. So when you're looking at a company, the fundamentals are the most important thing, because there's tons and tons of companies who are just very, very weak and where they're going in the trajectory, and they're very hyped. And when conflicts like this happen in Ukraine, in Iran, different wars start, if something happens with the conflict between Taiwan and China, or even just recessionary fears, those companies that have weaker fundamentals tend to be blown away. They tend to be very, very bad to hold on to. So just like he said there, good growth companies, which is what we obviously discuss on this channel. So let's keep going.
Stand. Now, again, if we're talking about, you make the statement that higher oil prices are actually okay or for the stock market, doesn't the broadening trade have an issue with that? I mean, if you start worrying about the impact of higher oil prices on the economy itself, how does the broadening trade work?
I think it's a good question. And we do have to remember there's the stock market and it's not always the economy. So I think the U.S. economy is going to have some risks for the reasons you described, which is why I think growth stocks start to look better, which is a lot of tech. And again, the U.S. is a growth index. I'd probably lean towards growth stocks outperform, which is not necessarily a broadening trade.
Let's finish with a quick one on Bitcoin, because I think,
wow, some really good insights from Tom Lee there. Excellent advice too on the market on to stay cool. So let's look at the S&P here. So on the day, as you can see on the 1 month chart, declining, but over 6 months, it's holding at a pretty good support level here. So the 6,700 range, 6,600 range, in that ballpark, really holding pretty solid. And I'm thinking what Tom Lee's saying is once we push past this $7,000 resistance level, then we'll push up to a new resistance of 7,300. I think that's what he's really trying to say, because we've broken past this support line a couple times now, and you can see it's very quickly corrected back up the other way. And remember, don't catch a falling knife, but on certain positions and trades, such as trading the S&P, I mean, there's a lot of backing behind this from 401ks, IRAs, people's retirements, even around the world, people buying into the S&P 500 in the US market. So just like we're seeing here today, if we go to the 1 month, it looks very, very similar, or excuse me, the 6 month mark. Very similar situation here, guys. Like the charts let's look at the 6 month of the S&P. Okay, this is S&P. These are Qs. S&P, Qs. They look very similar. And so my intuition on this, just like Tom Lee said, thinks the bottom is pretty much near or if here, especially for the growth sector and the tech. And we're going to rebound up heading towards 7,300 on the S&P. So definitely good signs that we're adjusting good to the oil market. Now, let's check the fear and greed index here. As you can see, we're at 20, so we've come back down from some pretty crazy levels around 30 to 35. So that is good. I mean, people are getting used to this conflict now, for good or for worse. I mean, we're not here to be the judges on that. Obviously, we're here to make money in the market, but we are seeing a lessening of that fear. Now, that's why it's such a good time to buy. And this is what Tom Lee was saying, because once this fear dissipates, people will start investing again. There's going to be a flow of money coming in because that fear index is going to go obviously up. So there's going to be there's going to be less of the fear, and it's going to be the good time to buy would have passed. And so if you want to take up on that upside, definitely consider jumping in the market now. And if you like this video, click subscribe. I love making these videos for you guys. A big thing I hear a lot is, how do I protect myself in these different environments? And that's exactly what we discuss. The most important thing is learning the skill and the strategy behind trading. As soon as you learn that skill, you have the rest of your life to slowly keep perfecting it and learning from these different market conditions. Instead of being reactive emotionally, you're taking in those lessons and you're creating your strategy to actually win. Now, if you want to bypass that strategy, this is obviously what I've done for the past few years. And it's really what I've honed in on to make sure to help you guys in the market as well. So if you like this content, you want to stay up to date on the news and on exactly which stocks I'm picking, then make sure to subscribe to the channel and leave a like down below. But with that being said, peace out, guys.